This is Investment Perspectives with Brad Kimes. Daily live streaming interactive. Featuring Mrs. Backup. Subscribe, hit the notification, smash the likes. Now, here's Backup Brad Kimes. Come on in.
Welcome back to Investment Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at Backup Bradley above on the screen. And we have with us the one and only Mickey B. Fresh. How are you, my friend?
How you doing, Brad? Thanks for having me on again. It's always a pleasure.
I'm doing well, and I'm doing even better now that we got you back on the show. And believe me, I want you to know this. I've had people, since I've told them a few days ago that we were going to be doing a video, they're asking me like, hey, I thought you were doing a video. Where's the video with Mickey B. Fresh? I'm like, it's coming. So let's not keep them waiting, Mickey. Let's get down into this thing. We want to start with data collection and the idea that we heard Ashish Burla and even Brad Garlinghouse talk about low value, high frequency payments as their directive at this time, as opposed to the high value, low frequency payments. Can you speak to this point, Mickey, and give everybody an idea of what you're thinking?
Yeah, absolutely. So the one thing that's different that he brought up with high volume and low value payments, one thing that it brings out is you could get more data out of the network. So I've been talking to David Hamilton about this, and he's very good, and he did some research on this as well. And we see that they're building this next generation trading platform behind the scenes. Now, they haven't talked about this publicly, but in all their job descriptions recently, they keep saying next generation trading platform and data platform. So the data that comes out of the network is extremely valuable for the market participants in the network to use to their benefit. And that's one thing that Swift can't provide. And it's one thing that RippleNet, the more payments that you flow through the network, the better data that you are able to extract. For
Absolutely.
High value and small volume, you won't get as much data out of it. And that's the one thing that the more they run through from one node to another node, I mean, we can get really technical, but they could get down to the value of the nodes and the weights and the distances between them. They could extract all that data. You could run machine learning, AI on it, and use those other technologies to their benefit. But if you don't have the data to begin with, you can't use those technologies. So this is one thing that RippleNet as a network is very valuable. And it's why they've been able to sign up so many participants besides all the cost savings and everything else that goes along with it.
Well, you make such a good point, because we spend so much time focusing on, the direct objective of what Ripple is doing with XRP and the use case of XRP, that, we have to keep in mind that there's a much deeper narrative here, because, I want to remind people, as a macro notion of exactly what you're bringing up here, is that Ripple, again, defines itself today as a blockchain infrastructure company. And that means that they're putting in and building the market infrastructure, and that means that they're going to be doing important things on the back end, exactly like you break down, which is data collection.
Absolutely. They say they're building a data platform. So Ripple, as much of it's a payment platform, is also a data platform as well.
Absolutely. This is remarkable. So it is exciting. Now, recently, we've seen the ODL, on-demand liquidity levels, actually drop off a bit. And I don't know if everybody remembers, and I'm going to try to find this really quickly, because I think I actually have this in my feed from just a day or two ago. And, when I was in Singapore talking with David at Swell, he talked to me about how MoneyGram was like a test, And let me see, I think I have this right here that I could set up for people. Let me spin this clip for them, Mickey, and then we'll talk about this.
Sounds good.
Okay, here we go.
Essentially, trying to win-win. And the biggest thing for us is that it means that we have effectively an unlimited source of volume for on-demand liquidity transactions, and we have a motivated customer. So, and to be honest, like, it took us a while to get it right. It's been kind of a bumpy road, and it's nice to have somebody who can provide you as much volume as you can handle, so you can test easily, and without having someone who's got some patience and understanding. And the road's gotten a lot less bumpy recently. Real-time applications, and now it's just a matter of ramping up volume.
And David,
There it is. And now it's just a matter of ramping up volume. And for those that didn't know or not familiar with the clip, that was David and I at Swell in Singapore talking and discussing MoneyGram and on-demand liquidity. And he talks about the ideas that working through the kinks and getting it all hammered out and, you know, and being able to make sure everything is exactly the way they need it to be. Again, referring to data collection. You know that was a part of their process, to your point, Mickey. Talk about this for a second.
yeah, absolutely. So MoneyGram was such a great test for them to be able to ramp up to almost 10% of the volume going into Mexico was a huge amount. And like David Schwartz said, we were able to use them as a test bed to do any types of transactions in treasury, remittances. So they pretty much ran through everything that probably needed to be tested as possible. And it seems like to me that they're implementing this next generation trading platform on the back end of all this, and then they'll be able to ramp back up again. Because the way the market's structured right now with the travel rule and all that, it's really not set up to handle a full ramp up, in my opinion. And I think they're putting the last pieces of infrastructure in place for that to happen. Your Pay ID, your secure messaging with the TRISA, and then tying all the liquidity together with those exchanges into one, or into the institutional side of trading. Because really, these crypto exchanges are more like brokers than they are exchanges.
Well
so we
said.
call them exchanges, but they're more like brokers than they are true institutional exchanges. How many NASDAQs do we have? It's pretty much one in each country. We don't have hundreds of stock exchanges in a country, do we?
No, it's very well said. I love the way you said that as a broker. You can see it that way. It's very well said.
Yeah, it's almost like the Binances and the smaller ones are more of brokers. They're just big wallet platforms, really. They give you the charts, they give you your news, they give you other stuff, but are they able to really provide the liquidity if it's siloed into hundreds of different brokers? You need all that tied together into more of an institutional, like the next level up that will handle all the risk. The risk is really the big thing. So a bank's going to be able to go to these exchanges with no counterparty and be able to buy from them. I think that's that infrastructure layer that they're still developing on the back end, and that will probably include PolySign. It's like a tier above, which will tie all the liquidity together into the institutional exchanges for the asset managers, the big FS brokers to use, and then these exchanges won't have to worry about providing all the liquidity themselves because they'll be tied into a bigger system.
Well said.
And they're more just the transaction platform.
Well said. And I want to take this opportunity to bring up, you said risk, and not only the risk for the banks to deal with in exchange, but how about the centralization? We've touched on this before, but the centralization of the exchanges in the crypto space right now. They buy it for you, they sell it for you, they hold it for you. This doesn't look like the traditional market structure, man.
No. Absolutely. It's the one thing is we say this is the most decentralized marketplace, Bitcoin, Ethereum, XRP, but we're trading it on the most centralized platforms possible, more than even the traditional markets, a lot more so. And it's too centralized for the traditional markets because it doesn't separate the risks for the big market participants to come in. They're leaning all on that platform to do everything instead of breaking up the value chain.
Very well said. Very well said. And I'm making an adjustment on our audio while we're talking here, Mickey. I want to see if this keeps going here.
Okay.
I just want to make sure we have a nice, clean audio for the audience as much as I can get it for them. Okay, so very well said, because I wanted to touch base on that about the, as decentralized as the idea is about crypto itself, where we go to buy it, sell it, and even hold it at times is just not... It's not at all like the traditional market structures. Yeah, not at all.
No.
Okay.
Yeah, we need to break that up a little bit. I mean, the exchanges shouldn't be doing everything. And I think we're going to see that with the travel rule. It's kind of pushing them in that direction to break it up.
I agree with you. And okay, so let's move now to some recent news, Mickey, about the SBI Investment Fund. Now, this is pretty darn exciting. SBI VC is custodying assets. Now, I hear a great part of this portfolio involves an asset we're interested in.
Absolutely. So SBI created a new subsidiary that's going to create this crypto fund that's going to be backed by real assets that will be custodied by SBI VC. So from what we've heard so far, this was just announced today, that it's going to be 50% XRP and the rest will be broken down between Bitcoin, Ethereum, maybe Bitcoin Cash. But the fact that it's going to be 50% XRP, I think is phenomenal. And it's going to be backed by real assets. So when they sell this to their institutional customers, it'll be a fund. It'll have 50% XRP, and then those XRP will actually be physically custodied by SBI VC.
Absolutely. I mean, that is exciting. Now, when we got talking about this, it reminded me of another investment fund, which is Grayscale. Now, I'm not familiar, and I know you said you aren't either. So full disclaimer to the audience, I don't know if Grayscale physically holds the assets or not, but I know that they bought more Bitcoin than anybody to date. I do remember that. And also want to remind people that these investment funds are incredibly important because they are proving to outpace the actual asset value itself. That's how fast they're growing.
Absolutely. They're trading at a premium.
It's unbelievable. So, okay. So let's move, because I want to let everybody know we got a big conversation we're about to get into here in a second. But let's start with... XRP had 190 million added to the total circulating supply yesterday, and I got to shout out Hiding Out Now and Rod Hop, who had amazing eyes on that and caught that for anybody. I always like to keep an eye on this, Mickey, because it appears to me when I see it that it's an adjustment for more demand for liquidity, and they need to add to the total circulating supply. It is in Ripple's best interest to have XRP be as high a value as possible, but it also, if we're right about the conversation we're getting ready to have and what I've been having here over the last few days, XRP is actually a currency. And if that's the case, they need the digital asset XRP to be extremely reliable. It doesn't mean that it can't go up in price, but it needs to be really reliable with a tight trading range. Can you talk about this a little bit?
Yeah, absolutely. So we know that David Schwartz a couple years ago told us that the X of the XRP means it's a currency, it's a non-sovereign currency.
That's correct.
That's what they designed it for from the beginning.
Yes.
So this was designed to be a currency first.
That's right.
Now, to have XRP, it seems like they're setting the stage for XRP to be classified as a currency in certain use cases, because how they're using it on RippleNet right now, it's a bridge currency between two fiat currencies. Now, you don't use Bitcoin like that. You don't use Ethereum like that. Neither of those are using as real currencies to pay for things either. Now, with XRP, you're using it as a bridge currency. So it showed its utility at high volumes. We're talking, they were putting 10% through to Mexico. And they're in multiple corridors here now. So it could get a classification as a currency when it's being used in that use case as a bridge currency in ODL on, say, RippleNet.
Absolutely. And for people's knowledge, I'm just throwing up all the money graphic that I've used here that we had an audience member make, and I appreciate them doing so. But yeah, and I'm just throwing this up here so you can see a picture of the ledger, the supply chains, the fiat, the oil, the silver, the gold, and those things that they could see, the UK pound, the whole bit, you know. If in fact we understand this correctly, this is very similar to what it would look like here. And not only that, you know, the UK, to broaden this conversation, because we're going to talk about this for a few minutes here. So to broaden this conversation, UK has called XRP an actual hybrid token, to your point. Mickey, talk about that.
Absolutely, because we don't want it to be limited to just being a currency, because in certain use cases, it's going to be used as collateral. It could be used as part of a fund. So we'll have a hybrid. It could be used in a hybrid type of way. But when it's being used as a bridge currency, it shouldn't be classified the same way as a Bitcoin would be as a store of value.
Right.
So it seems like they're starting this narrative to create, so you won't have to deal with the capital gains tax and all of that. So when it's being used in, say, ODL, it's in one classification as a currency, right?
Absolutely. And I find this extremely interesting. And the illustration that people are looking at, by the way, is Liquid XRP, who did that for me and converted one of my whiteboard series. Shout out to him. But, you know, getting to this point, I want to talk about Chris Larson came out and put out a video a day or so ago, and it was really a call to action. It was a call to action for U.S. regulators and government to get a classification for XRP. Right. And not only because of the health crisis and the moment that the world is in, but because he even remarked that Bitcoin and Ethereum were given status and clarity, and it benefited in his eyes China, because that's where most of the miners are for Ethereum and Bitcoin. Now, with that being said, I have to think to myself, Ken Kurson is very close to the Trump administration. He sits on the board at Ripple. You know, I just feel like there's a level of optics here that are taking place to an extent. I mean, does Chris Larson really go onto Twitter to make the call to action? I mean, I you know what I mean? Or does he call Ken's office and go, hey, Ken,
I know.
You know, you really should ask, you know, Donald next time you see him, you know, where we at with this thing, you know, and because I just feel like.
And we got.
Go ahead.
And we got Craig Phillips there, who just came over from the Treasury.
Yeah, and
who
Susan
was the senior
Friedman,
advisor to Mnuchin.
Exactly, and Susan Friedman from the U.S. Treasury as well.
Yes.
And then there was another gentleman back in 2015. I don't know if he's still there, but he came from the Treasury as well. It was Mike somebody, and I don't remember now. But yeah,
Gene
I mean,
Sperling.
Yeah, it's Sterling, right? Or Sperling, yeah. So yeah, so I mean, you know, 3 individuals in the U.S. Treasury Department. You know, we see Joseph Otting used to be the head of the OCC, the Office of Comptroller of Currency. Brian Brooks has taken his place as the head of the OCC. Brian Brooks and Joseph Otting used to work for and with Steve Mnuchin at his bank, One West Bank, before he became the U.S. Secretary of Treasury. This is a tight circle we're talking about here, Mickey.
Yes, it very well is. And it's interesting how he came out and said, we need clarity. I mean, basically, the U.S. has given clarity to Bitcoin, Ethereum, which are controlled in China. And he didn't say just give clarity, though. He said even give support to those American crypto assets like XRP. So we could see something in the future beyond just clarity, but actually give support to XRP. So they get a designation where your PayPal, your other types of companies are going to have to use XRP, or not have to use, but will be much easier to use under the new types of guidelines that are going to come out, where you're going to have to use a currency between maybe 2 assets to go. And now if XRP is classified as a currency when it's going between 2 different currencies as a bridge currency, right?
Absolutely.
So we can see they're crafting this narrative, it sounds like, right?
It does. It does.
It really does. And it seems like we're on the brink of something coming. It really does. I mean, they're really hitting home with the China and the mining and the waste of energy and the control that the Chinese government's putting all this money into technology, and the U.S. is kind of just sitting, finally hearing about the digital dollar, but it's like, move along already. But
Absolutely.
Is that happening behind the scenes? That's what it seems like to me.
It does. I feel like there's a lot more going on behind the scenes than we realize. And to that point, just 2 days ago, we had the deadline for the FATF. We're going to talk about that in a second. And the other thing I wanted to bring up also is that, we need to talk about Giancarlo and his thoughts on being a currency, XRP being a currency. Let's start with the FATF here. So 2 days ago, we had the FATF deadline for the first year round of KYC, AML, CFT, and travel rule. Now, obviously, we haven't seen a cataclysmic moment for the exchanges. However, there has been a lot of coverage and a lot of press releases and public announcements, at least, from the exchanges, many exchanges that have said they're going with Chainalysis, they're joining PayID. PayID just came out days before the deadline, which is a solution as well for exchanges and vast virtual asset service providers. So talk about this a bit, Mickey.
Absolutely. So the PayID is like the account namespaces. Yeah, PayID works with something called TRISA, which is the trial. I don't remember the exact acronym, but it's a secure messaging between virtual asset service providers. They have to communicate where this asset came from and then where it's going to, and then attest to that identity and to the public blockchain where it came from. So this is a big undertaking, and you have your BRD like BlockSet. They come to play into all this because you have to be able to have nodes on the public blockchains of where the asset came from, whose wallet wasn't in. So we're starting to see this has been on the works for a year, but PayID is one layer that goes with the secure messaging for these virtual asset providers. And it will make it easier. I think in the next month or two, we're going to really start seeing more, because they have to, like we said in the beginning of this video, they have to tie all the exchanges together.
They really do. And
right?
That is such a great point. And where I've been with that notion that it absolutely has to happen. And I want to remind everybody, they do. And I want to remind everybody, as you're talking about PayID here, what I have is a picture right now of Ripple Labs Incorporated on the SEC website. And if you scroll down to the documents and then to the mark images for trademark filings, it shows the most recent filing, which was a few days ago for Blockstars, the podcast. And then recently under that, on the 17th of June, was the trademark for PayID. Ripple holds the trademark for PayID. So the coalition of Ripple and everything that's been put together for PayID is Ripple, period. Or they wouldn't hold the trademark. Absolutely. Yeah, so it's pretty remarkable. Absolutely.
One thing about PayID, I thought that was really, I don't know if many of you have watched the hackathon stream yesterday. It was a couple hours, but it was really fascinating because they showed how they built this on open standards that already exist, that are the internet, HTTP. So everyone could adopt this. So yes, Ripple might own the trademark and be able to build solutions around it, but anyone could adopt this, and it's completely neutral. It works with Bitcoin Ledger the same way it works with ACH or XRP. So it's not XRP only, it's for everybody. And I think that's important to note, the fact that they made this truly open and neutral, where it will benefit XRP and whoever else adopts it.
Absolutely. And they expressed in the writing, it was either on the Ripple Insights or on PayID, one or the other, and I can't remember right now, it escapes me, but I do remember them saying XRP backend settles the platform. So it is where applicable, XRP will be the solution used, but you're absolutely right. It is set up
any
just
type
like the
of
ledger.
ODL.
That's right.
Absolutely. I mean, it's any type of Pay ID is just a layer that goes with the payment.
Yep.
Any type of XRP payment is going to have Pay ID layer in it, but it can be used for anything. So they kept it open. Obviously, it's going to be adopted first by all of the Ripple Net and everyone who's using ODL and Ripple, but it can be easily implemented then out to everyone and used in their own way. So it doesn't have to go with, say, the Bitcoin payments and then settle on the ledger, but it's just a layer that could work with any type of ledger, basically.
Absolutely.
It's something they've been working on since 2014. So this isn't something they just drew up this year and were like, oh, we're just going to make an ID solution, a namespace solution, because that's what it is. And then it would work with like a global ID.
Absolutely.
So this is one layer part of their whole solution. I mean, it's something that's needed, and hopefully this will work with bank accounts too. So this will bridge the traditional markets with the crypto markets.
Oh, it would
right?
be amazing. That would be fantastic.
That's really what it seems it could do. It could connect right with ACH, and it could connect with PayPal, and it could connect with the XRP ledger.
Now you're talking my
It's
language.
such a brilliant idea. It's such a brilliant idea.
It really is.
I mean, it was so
man.
smart. And to do something, and they got a wide group. I mean, you got from the Brave browser to blockchain.com to PolySign to Standard Charter. So it's a very wide array of different actors in the space.
It really is. And so let's talk about this now. So we just saw earlier this morning, I don't know if you saw it, but the EU is creating a regulatory regime for cryptocurrencies, and this was from Vladis Dombrovskis, who is and listen to this title, European Union's Executive Vice President of the European Commission for an Economy that Works for People. Now, how about that for a title?
Wow.
Yeah, that's a title. That is a title. So say that 5 times fast. So anyway, okay, so he has a spot in here in this article, and I'm just going to move it so the people will be able to see it here. But this is the article that we're talking about. I covered this morning, but I want to bring it up because it's pertinent to our conversation, where the conversation's going. I'm going to give you a piece of what he says here. I'm going to read from here. So a pilot scheme would allow regulators to provide a space for new experimental solutions to be monitored and observed, he said. While Dombrovskis' speech contained few specifics, he did say that the EU was particularly keen to bring stricter rules on any project deemed to be a global stablecoin. Then he says, it isn't clear. The article says, CoinDesk says that it's not immediately clear what he means by stablecoin, but just the fact that there's not enough regulations and there will be a stricter way to rule and have guidelines for what would be classified as a global stablecoin. Now, they do reference in this article Libra as a potential global stablecoin. I think you and I both know that that's shot down like a clay pigeon out of the sky.
Yeah, that's not going to happen. It's going to be national now.
Yeah, it's going to be national, and that's out. Okay, but what isn't out is what I'm showing everybody now, which is a document from back in mid-April. The Financial Stability Board, I think you saw this a while ago, and it was them addressing the regulatory, supervisory, and oversight challenges raised by global stablecoin arrangements. Now, I'm just going to read you this definition inside of this. For everybody who doesn't know, the Financial Stability Board is a regulatory body connected to the G20, so it is a big deal. Now, in this, in the beginning, they have a glossary, Mickey, and they break down the definition of a global stablecoin. I'm going to read this to you. A global stablecoin is a stablecoin with a potential reach and adoption across multiple jurisdictions and the potential to achieve substantial volume. Now, I don't know about you, but maybe I'm biased, but there's something in me that says I can't think of another asset that fits the bill here outside of XRP.
You know, one thing that's interesting, it's what they don't say. They don't say that it's pegged to a specific price of another asset. The fact that they leave that out
that's interesting.
Is very interesting to me, because typically you would think of stablecoins as being pegged to another asset.
Well
the fact
said.
that they don't say that is very interesting, and it leaves it open to what the definition of a stablecoin is.
And to your point,
right?
The definition underneath of global stablecoin is stablecoin, and it is exactly as you said. It is a crypto asset that aims to maintain a stable value relative to a specified asset or a pool or basket of assets. And that is quite compelling because there is a very distinguished difference in the eyes of the FSB, right? Of what the difference between a global stablecoin is. I have to say, before this document came out in April when we first covered it, I never heard global stablecoin, those two words put together ever before this document came out.
Absolutely. Can you just clarify, because you said that quick, what was the second definition of?
Of the stable coin itself was exactly as you said.
But not global.
That's right. They defined a regular stable coin as just something that's pegged, relative to a specified asset or a pool basket of assets. So they don't even see a global stable coin as something that is a pool or a basket of assets.
No, they leave that definition out. That's very interesting.
It's extremely interesting. Yeah, because they talk about to achieve substantial volume, the potential to achieve substantial volume while crossing multiple jurisdictions. Now, I'm reminded, and shout out to Miguel Villas and the amazing job he did before he left Ripple. But he helped connect more than $1 billion worth of liquidity to the asset XRP. Well, I find that quite significant. I mean, truthfully, I don't know of another asset, and I'm trying to be very unbiased as much as we cover XRP. XLM, for instance, like it's the same ledger or, in its infancy, right? But
pretty much.
Yeah. So, in my eyes, I say to myself, well, okay, XLM could do that too. But if they're doing that or could serve that purpose, I haven't seen them take the global approach that Ripple has. Marcus Treacher commented on this not long ago, and I covered it. XLM has got a lot of good things going on, and I think they really do. They have an X in front of their symbol. They intend to be seen as a currency as well, right? So this is quite interesting to me. Talk about this, Mickey.
Yeah, absolutely. So just touching on Miguel Villas. So we know he went to Miami. One thing that I wasn't aware of that I found out recently is Miami's like the biggest fintech spot on the East Coast right now.
Wow.
So it's a growing gateway for Latin America in the fintech. The Miami mayor, they're embracing fintech there. So I don't think he went to Miami to just go lay on the beach.
Yeah.
He's down there because that's the new Wall Street of fintech is Miami.
How about that? I did not know that.
I didn't know that until only a few weeks ago, and I saw a video clip of the mayor embracing fintech, crypto, blockchain, and with open arms, where Wall Street has been really strict in New York with the BIT license. There's only 25 companies. Miami, which is a gateway to Latin America down there, is going to be a global hub for fintech.
Wow.
And for crypto. So that's why he's down there. It's not just, we think Miami laying on the beach vacation, but there's obviously developments going on there. And it's a huge fintech hub.
Well, I tell you what,
that's something to note.
Yeah, and somebody is very lucky to have him wherever he ends up landing. That is one smart guy, man. There's no question about that. Okay, so
exactly.
So let's continue this conversation a little bit about the idea of a currency, or like the UK sees XRP as a hybrid token. So recently we had Giancarlo, who is legal or lawyer with Wilkie Barr. He is also counsel to Wilkie Barr's counsel to Ripple. We know that Christopher Giancarlo, former CFTC chairman, he is also now the head of the Digital Dollar Project. He is about to speak for the second round in front of Congress in 4 days. Mickey, let's talk about that for a second.
Wow. I mean, the fact that he came out and did that full report on XRP and broke down all 5 ways that it's not a security and leaning towards it being a currency, I just thought it was huge.
Mind blowing.
I'm not talking about the Forbes report here. The real report where he broke it down I mean, it was all about XRP not a security. Now, this guy is the former CTF chairman. He's a lawyer. He's with the same law firm that's also representing Ripple. I mean, how much more of a connection can you have? And it just adds to the Larson narrative that they're trying to get a classification as a currency. I see that here. And when they say regulatory sandbox, that doesn't mean that the product's not live. So if there's going to be a sandbox, just like in Singapore, the products are still live. It's just under the oversight of a regulatory sandbox.
Absolutely.
So
well said.
Hopefully we could see that PNC Bank live with it, maybe a Bank of America announcement live with it under the regulatory sandbox until we get a full classification. So it's almost like a stepping stone to get there. It feels like we're on that brink. Now, this guy's building the digital dollar project. I mean, you need infrastructure to build that. And now he's with Ripple, who's a blockchain infrastructure company.
Absolutely. So now let's talk about this, because you make a good point. You know, you're tying all this back in, Giancarlo, the Dollar Project, and XRP getting a currency designation. You know, let's see if we can bring this home a little bit here. So the OCC, we mentioned earlier about, being recommended from Congressman Lynch about piloting a cryptocurrency regulatory sandbox, as we talked about. We also know that the Fed has recently spoke on the idea of a digital dollar and that they don't want to see private company involvement. But I find this to be a little bit hilarious, just because, the Federal Reserve works with the government, but they're not a branch of the government, Mickey,
Absolutely.
This is fascinating to me. Now, you have the
It's
OCC.
going to be interesting.
Yeah, you have the OCC that is really being cited to pilot this program. You have the Federal Reserve that's saying they don't want to see a digital dollar done unless they do it themselves.
Now, just to classify here, I just want to make sure people know. Now, OCC is a division of the Treasury.
That's
right?
correct. That's correct.
Okay.
Absolutely.
So,
yep. It is a direct regulatory body connected to the Treasury, as is FSOC.
Okay.
Right?
Okay.
So FSOC is too, the Financial Stability Oversight Council, and Mnuchin is the head of the FSOC. The FSOC has been urged over the last couple years now to, as a side note to all of this, is that RippleNet is a cloud service, right? Google Cloud is a cloud service. Amazon Web Services is a cloud service. Microsoft Azure is a cloud service. And all of these entities are handling payments for banks, and they're not banks, Mickey. There's been a huge call to action from a lot of congressmen over the last couple of years to deem these cloud-based services as systemically important financial market utilities. This, to me, Mickey, that classification would come from, again, the FSOC connected to the Treasury, just like the OCC talking about a pilot program for cryptocurrency. Then is the knee bone connected to the hip bone? What are we talking about here?
It absolutely is. I mean, it seems like there's some type of power struggle between the Treasury and the Fed going on here.
Yeah.
But the Treasury has the authority with FSOC to deem these things systemically important or market utilities, where the Federal Reserve doesn't have that ability. They're the regulator of the payment space, but the Treasury really has the FSOC, which is the head regulator of regulators, right?
Absolutely.
But they enforce the laws. They don't make the laws. But they can deem things systemically important. And I think that's where we're going here. But the fact that the Fed is against the digital dollar, unless they do it, it seems like there is some power struggle going on behind the scenes.
Well, it certainly does.
What do you think about that? How Giancarlo CFTC is connected to the Treasury with FSOC, and then the Fed coming out randomly saying, "Oh, we don't want a digital dollar unless we do it."
Well, I'll tell you.
That's the struggle. Yeah. What do you think of that?
I'll tell you what I think of it. What I think is I see a huge power play happening here, and the leverage is not in the Fed's lap, it's in the Treasury's lap here. We
too.
see a
I agree.
mounting case being made. And by the way, I made the reference as a knee bone connected to the hip bone. It isn't. It's the knee bone connected to the damn leg bone. So watch my analogies here. So anyway, but no, I see a huge leveraging taking place here. Okay, first of all, during this pandemic and crisis, the Fed has been bloated with printing money and absorbing debt. And the Treasury has even Mnuchin even spoke one time during this pandemic early on. If he didn't get the regulation he'd write it himself. And, that was about getting the money and the stimulus the first time around to everybody. So what I see is 3 people have come from the U.S. Treasury and are now over at Ripple since 2015. Okay. And it's the Mike, is it Sperling? Is that his name?
Yeah, Gene Sperling.
Gene Sperling, yep, Gene Sperling, and then of course Craig Phillips, and then Susan Friedman.
Michael Barr was another one, a special advisor.
Special advisor, right? So there's 4 of them even. So, and then you talk about FSOC and the ability they have to come in and deem these non-financial, non-banking entities, these cloud-based services, as systemically important. The leverage to me is not in the lap of the Fed, it's in the lap of the Treasury, and the Fed knows it, and they're flailing, right? And now you have Giancarlo coming in and making the case in front of Congress that the Fed is not the ones to do this, and the public and private relationship should be the way to go here. I have to say, the case is really being made that the Fed should have nothing to do with it.
Yeah, this is really turning out to be interesting. I'm curious to see what Giancarlo says about all this, because, you don't want to discount the Fed completely, but you don't want them to do everything themselves. Exactly, because what the Fed's argument with the Fed now was that the real-time payments is just for the big banks and nobody else is using it. So you want a private-public together without just the Fed doing it all themselves. Another thing to tie into this,
Go ahead,
is the Volcker rule that was recently changed.
Well, before we get there, I just want to comment to your point that, when we think of the Fed, I think of a lot of words when it comes to my mind. Innovation isn't one of them. Go ahead. Let's talk about the Volcker rule.
Yeah, they're not one to innovate, so you're going to need, and Giancarlo has said this, it's going to only work if you involve the private sector to build things. He even said it in one of his clips. The government couldn't even build the health website. So how are they going to be able to build anything, really? They don't have that type of staffing and developer and funding. So you're going to need the private sector to build the infrastructure for pretty much most of this. It's not going to happen with the government building anything. It's just not going to happen.
No, absolutely. And I agree. I mean, look, there's a lot of things we can say about the Fed, which is its own entity. There's a lot of things we can say about government itself, which but innovation's not a word that comes to mind. And I think of a million words, and innovation isn't one of them. So, yeah, very interesting. So, okay, so 4 days, Giancarlo is going to be back in front of the Congress, and I think he's going to be reinforcing this case and this notion that there actually be a public and private relationship to help design this for the Fed, because that's where the innovation always is, right? I mean, that it?
Absolutely. It has to be public-private. The question is it going to go through more the Treasury, or is it going to be the partnership going to be with the Fed and the private sector, or the Treasury and the private sector, right?
Well,
that's the question I have.
Yeah, that is the question, honestly. And I mean,
So we have to, this is something we have to keep an eye on, we have to keep watching. It's still developing, but we see where it's going.
Yeah, the leverage is in the Treasury's lap to me. I mean, they have all the people that are over. Hey, to add to that point, Michael Moiser from the U.S. Treasury was heading up Chainalysis, which is a interface for all the exchanges and virtual asset service providers to plug and play and become compliant at the drop of a hat here. So Michael Moiser got all of that connected. He got the compliance issues dialed in for Chainalysis. He connected several government agencies to that company, Chainalysis, and now his 2.5, 3 months ago recently returned back to the Treasury at FinCEN and is given a new title as the head deputy director of digital innovation. I mean, to me, the leverage and the momentum is coming from the Treasury, because that's where the currency division really is.
Mm-hmm. I agree. That's where the division is going on right now.
Yeah, it really is. Oh, and the Secret Service has been ordered to move back to its original location, which was the Treasury, because the Secret Service, for those that don't know, was not just an agency that protects important congressmen and the president, which it does do, but one of its main issues and scope of work for the Secret Service is chasing down money laundering and fraud and counterfeit.
Counterfeit, yeah.
So and they're expanding the division. It's interesting that they're going back to the Treasury. I have to say, whenever we sit down and have these conversations, Mickey, I'm just glad that you and I can have them. And then there's another level of gratitude that we're able to share this with so many people to hear it, because this is really starting to take a shape to me. In this conversation that we're having here, there's a lot of weight coming from the Treasury Department here, involved directly with Ripple as well as cryptocurrencies in general. Your thoughts?
Mm-hmm. Yeah, there's a lot of moving pieces. So to truly understand everything that's going to happen in the future, we have to see what's going on and take place over the past couple of years and up to right now to understand why that happened in the future. Right.
Absolutely.
So to keep on top of this and having a discussion about it, I think is very healthy, and it keeps us aware of the developments, and then we'll understand them when they happen and play out, which I think is coming very soon.
Absolutely.
For example, the Volcker rule. Right?
Oh, let's get into that a little bit. They're relaxing the Volcker rule, Mickey. Let's talk about that. Banks can now invest into private equity funds and hedge funds and more riskier investments than they could before. Let's talk about this.
So I'm not a disclaimer. I'm not a lawyer. So the recent reports that have come out with the Volcker rule, I've looked over. But like I said, I'm not a lawyer to be able to break those down in that way. But one thing it will allow that we do know is it will allow them to have more risky investments into hedge funds who could then invest in digital assets or into IPOs and things like that. So it opens the door for the banks to be able to do more than they're able to do now. And I think that's important with the whole regulatory sandboxes going on with the Treasury. I think it ties into all that because it will relax those little things that were really restrained by the Volcker rule. So when this is all rolled out, they'll have those freedoms to be able to invest in this hedge fund who could buy digital assets and create a crypto fund like what SBI is doing, but in the future. Japan's a great place to look at for what's going to happen here in the U.S. in the years to come.
I want to make a point off of what you just said, because you just reminded me of something, and we spoke about it before going live a little bit here, and SBI and this investment fund. And I want to remind everybody that we just had a heavy conversation about the domestic implications here in the United States. But this is a decentralized global digital asset, XRP. And SBI is heavily involved as an early investor in this company. They have a huge stake in the implementation of XRP. And although we are here in the States and we focus heavily on domestic rules here, and listen, I think you and I both agree that there's a lot happening behind the curtain that we don't get to know about. And I think that what looks like people turning a blind eye to the legislation or regulation is actually less a blind eye and more a covered hand. And I feel like that because, I don't say this out of bias, but the United States is the economy that dictates to the world what's happening. And the reality is here is that if you look at SBI and the fact that they've announced that they're going to be pushing this investment fund, and then Money Tap, I believe it is, and pushing the use of that, we have to remember that this is a global asset, is a decentralized global asset. And SBI could take off with this puppy and drive value into XRP and its price and volume and use. And there isn't a damn thing that the United States can say or do about that. Now, is it?
Absolutely. So SBI, Japan has regulatory clarity fully to use XRP in their crypto funds. That amendment just went through a month or two ago. So Japan, Thailand, they're ready to go over there. There's no more waiting for clarity in that region of the world.
Very exciting.
So the fact that they could have a fund that holds physical assets behind it and they could sell that to their institutional investors. We're going to soon have that here, but it's already go time over there. And it's only a matter of time before we see SBI get going with the money tap and the cross-border ODL flows, but then also a crypto fund. Now, how does that affect XRP's price when you start locking up assets and then selling the fund to institutional investors, right?
Well, if it's anything like what Grayscale Investment is doing, you know how that's going to turn out. That's going to turn out where the fund starts to outpace the asset, and the scarcity of locking the asset up obviously drives the price of the asset as well.
Now, I think we got to do a little more research on what if Grayscale actually holds the fund, holds the assets.
We do.
But we know the SBI one, they do hold the funds.
Yes.
So they do hold the assets that make up the fund. So wouldn't it just follow along if they're physically holding it? Wouldn't it just equal that price? So it's 50% XRP, 25% Bitcoin, 25% Ether. Wouldn't that be then the price if it's of the physical? Because isn't Grayscale its own like ticker symbol? And I'm not sure about that.
I don't know.
So,
I don't know. Okay. It says here in a quick description of Grayscale, I'm just pulling up here just for us to look at. It's just a quick reference here before we go. Digital asset manager Grayscale now boasts a total of $3.7 billion worth of Bitcoin, Ethereum, and several other cryptocurrencies under management, marking an all-time high for the firm. And it says these funds are held on behalf of its investors. So that's as much as I've been able to see for a quick look here. So it does appear, how they got it here. So, as a matter of fact, it says, I might even be able to find this as well too, because it does have here how they hold the investment. And I don't want to take people or your time too much in it, but you know what? I've got the page to look for it. I'm not going to dig too deeply here, but we will answer that question for all the viewers, in time to come here for sure. So Mickey,
we'll definitely answer that.
Yeah, we'll definitely do that. So look, let's final thought this thing where you're at today. What are the things that matter to you? What are you looking for? What are you hoping to see? Let's wrap this thing. What do you got?
Well, I'm excited to see what's coming out of Japan. The fact that they're making that crypto fund, that's an additional use case for XRP. Now, that fund is XRP centric. So unlike Grayscale's, this is 50% XRP. So out of that fund, you're going to lock up 50% of that fund is XRP that's taken out of circulating supply and being locked up. So it creates storage demand to balance out the utility of XRP being used as a bridge asset. And I think that's what's truly amazing about crypto assets in general, but really XRP. The fact that it can be used as a bridge currency and classified as a currency going between one fiat to another, but then also used in a crypto fund to pull the asset off the open market and create storage demand, which drives the price up, is that type of balance that we want to see out of a global, it's a new type of asset class. And this is a perfect explanation for it. And then you can use it as collateral. And bridge currency is just the first thing to get it to be a currency classification and then drive liquidity in it. And then you'll see more of these use cases come up. And that's what makes it a new asset class, because you have parts of a currency, parts of commodity, parts of a security, and they're all taken into this new, and the value comes, like you said, out of the protocols. And XRP and the Ripple protocol are unique in that way, where you have an exchange built into the protocol. And I am excited about this new trading platform that they're building in RippleNet, because I think it's going to be a key to tying all the exchanges and all the liquidity together on an institutional level to run ODL.
I completely agree. I'm going to add to your comments for a final thought here on my end. I agree with you. SBI and that fund is something to watch. Anything outside of the United States, knowing that the U.S. is still dealing with some clarity issues here. And I just want to point out a few of those things. So classification is something we need. We need a designation, possibly a currency designation or a hybrid token designation like the UK has done as well. We need to see some...
Or even a designation during ODL that it's a currency, right?
Absolutely right. And then we need
that
to
would
see,
do it.
Yep, and we need to see some clarity on the class action lawsuit and to keep an eye out. I don't rule it out. You know, we got to keep an eye out for that acquisitions and mergers and a potential IPO from Ripple.
Yes, we didn't get a chance to touch on that, but Garlinghouse did bring up we're going to use our strong position for investments or acquisitions.
He sure
Second
did.
time he said that.
He sure did, and it is something to keep an eye out for. Mickey, as always, you are amazing, and I tell you something, I know I am, and I speak for everybody else in the XRP space. You are a treasure, my friend, and a wealth of knowledge. Thank you for being here, and I want to remind everybody, or you remind them, what is the name of your YouTube channel? Is it just Mickey B. Fresh?
It's just Mickey B. Fresh. I'm still working on it.
Go
it's
subscribe.
a work in progress, but thank you so much, Brad. It's a pleasure to be on your show. I enjoy it, and thank you for everything you do.
As always, brother, and thank you so much, man. No doubt about it. Mickey, we will catch you on the other side, my friend. Take care.
All right. Thank you, Brad.
Thank you, brother. Take care, man.